YouTubers. Oh yeah, you know what time it is. Coming to you live from Merritt, BC. It is I, your humble servant, Mike Martins. Yeah, just sit back, relax. Let's get ready for trends in the housing market. I had maybe 45 people ask me if I'm gonna go live tonight, which is really sweet that people actually tune into this show on a regular basis. And yeah, I got some royalty-free music here that was sent to me, and people asking if I could play it on my, the gentleman asked me if I could play it on my show. So I'm just testing it out, seeing how it goes. Royalty-free music is always nice. Coming to you live from the Pacific side, California, Tijuana time, Vancouver time. Trends in the housing market. Broadcasting. I want to thank everyone that's broadcasting this or rebroadcasting this on podcasts and on different way. Like, people are rebroadcasting it, and there's even somebody else that's doing it with subtitles in different languages. In a different language, sorry. And I want to thank them for that too. Anyways, let's tune down the smooth music, light a candle, relax, enjoy. If you're listening to this, I'll be more descriptive for radio listeners. Yes, Trends is on. Mia is here. Mia is my insider that basically gets me information on the spot if I'm stuck for something, or I'm not sure about some date something happened, or a population of some city, or what's going on, right? Anyways, I'd like to thank everybody, and let's kick off with a plug here of my Starting a Business from Scratch series. It's getting there. I'm almost 30% stocked. I'm really happy. If you're watching my Starting a Business from Scratch series, you guys will be really impressed of how far I've come. And if you haven't watched it in a while, I urge you to get back. This video, basically, I talk about how it's really good to videotape and record a lot of your stuff for insurance purposes, especially if you have a lot of pricey collectible stuff that is pretty expensive online. And the shop's come a long way in the last 6 weeks, and I invite you all to join and see how I'm doing with it and how the customer base is coming along. I love it. I love the town. I love Merritt, BC. I love the kids that come and spend the day with me all day playing cards and stuff. Anyways, let's move on here to some trends in the housing market, and this is really good, people. Woo! So this was sent to me by Better Dwelling. They always send me stuff to play on the show, but like, I mean, I can't resist. The stuff is so good. You know what I'm saying? The stuff is really good. So look at this juicy article. Canada sees largest drop in real estate sales since 2010 of June. Oh, by the way, for people watching, it's the 20th of July, 2017. And depending where you're watching this, you might be another day ahead of us. Forgot to mention the time and date. Really important to timestamp some of this stuff. When people look back and say, you didn't say that. Well, I did. Look at that time I said it. You know what I'm saying? And Canada sees largest drop in real estate sales since June 2010. Look at that. The Great Canadian Real Estate Binge may be coming to an end. Numbers from the Canadian Real Estate Association, CREA, show the market across the country is substantially weaker when compared to the same time last year. Generally speaking, the market saw a drop in sales and decelerating price growth. Sales dropped 11.4% from last year, so that's saying something, and it looks like a lot of people are in hot water, especially a lot of the people that jumped on the bandwagon. A lot of bandwagoners jumped on to buy last minute, thinking they'll never get in. So there's been a drop in sales. Real estate across Canada are dropping at a rapid pace. There were 39,979 sales, an 11.4% decline from the same time last year. The monthly drop is the interesting part. However, at 6.7% lower, it's the largest monthly drop since June 2010. A monthly decline is normal for this month, just not a drop this large. And around this time, and I'll be very frank with you guys, around this time, my businesses, everything, it just slows down until mid-August. Everything pretty much comes to a grinding halt and then kind of reboots come mid-August. Look at that, people. Wow. So you're seeing the biggest decline since 2010. Prices experiencing deceleration of growth. So prices are taking a hit. Prices across the country were basically flat from the month prior. The composite benchmark, that's the price of your typical home in Canada, is now $616,000. This represents a minor 0.3% decline from the month before. So it's basically, this could be the calm before the storm. And Mia's commenting here, say, I was watching the real estate expert from the US on YouTube today. He was mentioning he's been watching the Canadian and the US market for some time and expecting Toronto especially to drop 50 points over the next 3 to 5 years. And somebody, Stefano, is saying, great job on the shop, Mike. Still can't believe about Sears, 9.2 million CEO. The key employees to motivate them, while the regular employees with 30 plus years are getting zero severance. And I'm going to tap into a plug later from a buddy that has a channel that's talking about the Sears pensions that are being wiped by this Canadian housing crisis. So yeah, and Lukey's here from Down Under. He says, hey, Mike, Sydney has made a new median price of nearly 1.2 million. I'm tapping into that too. Here in Trends in the Housing Market, lots coming up. And so this is what's happening right now in Canada, right across the fastest moving markets. The biggest increases in the country were Toronto, Guelph, Vancouver Island. Toronto ended June with a composite benchmark of 810 large, 25.34% increase from the same time last year. Guelph, a suburb of Toronto, saw a composite benchmark price of 421, which is also 25.34% higher than the same time last year. Strangely, in the third is Vancouver Island, where the benchmark is now 418, a 19.81% increase the same time last year. So Vancouver Island, there is somebody that's been discussing Vancouver Island on another channel, that it's basically becoming abandoned. Lots of empty homes. Prices are people buying 5, 6, 7 properties at a time, and it's taking a toll on the locals. The locals are actually voicing concern in town hall meetings. Let's go to slowest moving markets across Canada. Very important, people. The smallest changes from last year were observed in Saskatoon, Regina, and Calgary. Some of the coldest cities in Canada, by the way. Saskatoon had a benchmark of 306 large, a 3% decline from the same time last year. Regina had a benchmark price of 297 large, a 0.7% decline from the same time last year. Third from the bottom is Calgary, which had a benchmark price of 435,000, a 0.6% increase from the same time last year. So look at the declines here. This is a beautiful, beautiful graph here. Let me zoom this in for you guys, okay? So take a look at that. Vancouver Island, huge. Victoria, Lower Mainland is Vancouver, Lower Mainland. Greater Vancouver, Fraser Valley, Calgary, Regina and Saskatoon in the declines. I can't even pronounce this. Aggregati, I guess. So that's what's happening across Canada. Now, it's kind of interesting when you see this. Vancouver condo prices move up 135 large higher in a single month. Now, remember what I told you guys how when the tax came on, the foreign buyer's tax came on, that they were going to jump on cheaper properties and more affordable properties so they could flip them faster? Well, condos have been taking a huge hit, and townhomes and smaller units, smaller things have been taking higher hits in increases. I mean, Vancouver condo prices move up 135,000 higher in a single month. Vancouver condo prices move up 135,000 higher in a single month. Yeah, I gotta put a lot of emphasis on the M because that's a month. Just when you didn't think Vancouver real estate could get any wackier, a condo market goes completely haywire. This is out of control, people. You probably didn't think Vancouver real estate prices could get any crazier, but here we are. Numbers from the Real Estate Board of Greater Vancouver show a softer detached market, which I said because they're too expensive and they're higher risk. But condos are making surreal jumps in prices. Generally, the market saw higher prices, less listings, and even less sales. Yet prices still roared. Go figure. Prices are 2.9% higher than the month before. The benchmark condo price made a big leap higher in June. The price in Greater Vancouver is now $600,000, a 2.9% increase from the month prior. This represents a 17.6% increase from the same time last year. While that stems steep, one area in particular stood out at the stats was West Vancouver. Look at that. Look at that graph, people. It's just going right through. It's going right through the writing. Look, it's going into the article there. Look at that. It's underneath the article. Wow. And that's for a one-bedroom. But nothing beats Sydney. I'm sorry, Sydneyans that are watching this, but $1 million, no parking, condo, with probably a view of a cemetery or the worst view you could have. $1 million Australian dollars. And that's on par with the Canadian dollar. That's about $803,000 US for a one-bedroom condo with no parking in Sydney, in facing a dumpster or something, because there's nothing. That's how bad it is. And if you think like things are going to change overnight, it looks like it's either going to be two things. It's going to be a shock to the system. People get scared. Once people start to panic and get scared, the market starts to speculate. People start to sell and speculating, selling, and then you're going to have a slight dip in the market and people buying back in because they think it's the right time. And then that's when the crash happens. That's what I'm thinking. That's what I'm feeling. Look at this. The benchmark for condo price in West Vancouver reached $1.168 million, a 5.1% increase from just 1 month before. To put how big the jump, that is a perspective $135,000. 135 large. More than the month before. The month. A month. That's about $4,500 per day. Try getting that back on in any market in the world. $4,500 per day. Almost a month gross pay for a family in the area. It's kind of hard to say that prices are rising using any fundamentals at this point. But now, sales are 9.6% lower than last year. Sales are slipping across Canada. I already read this already in the other article. So scroll back if you want to see that first article. So I'm going to say this again because I can't believe this, people. I don't even know what to tell you guys. I don't even know how to make a joke about this. I don't even know how to find humor in this. I don't even know how to find... I can't even find anything in this because it's beyond anything I could ever fathom in my life. You know? It's like Vancouver condo prices move up 135,000 higher in a single month. I can't find any logic behind it. I don't see like anything scientifically that could prove, like there's no scientific way to prove how something like this could happen. There's no way to prove. There's no way to even show how this could happen because that's a price of a house in outside of Atlanta in Macon, Georgia. Or a 2-bedroom condo maybe somewhere just outside of Dallas, Texas or Arizona. This is phenomenal. Let's move on here before I get a Fathom attack here. Fathom attack, I'm actually putting the stamp on that one. Fathom attack is when you just can't get words to something. Mia's tapping in the comment sections, and she's saying, I hope no Canadians are still buying into this crazy market. Leave it for the foreigners to bet their money, then lose profit when it starts to crash. No Canadians should risk their finances on this. Yeah, definitely. I just hope that like the Canadian proper, you know, that's born and raised here, working, going to school, doing their thing day to day, isn't buying into this, because this is... Let's move on. I gotta move on from this. Anyways, let's keep going here. Listen to this, man. Better dwelling again. Better dwelling is eating up the housing market when it comes to articles. They're just ripping it apart. I love it. Better dwelling, guys. Subscribe to it. Let them send you updates. Really good. Over 1 in 10 Canadian dollars made in Canadian real estate goes to foreign companies. That's so. Before I even read the article, it's going into trusts, like just numbered account companies, like corporation companies, right? They're buying them as assets and holding them, type of thing. And that's what's happened in London. The Chinese have bought up landmarks, big buildings, like castle-y type things, homes and estates and mansions, and they're buying it through a trust, an estate. Also, not even that, not even going there. The that's happening in where was that? I was seeing that they're buying up huge. Oh, Grouse Mountain. If you watch my rants and lifestyle, the Chinese are actually buying a skiing mountain, an entire mountain. And for you people tuning in today and they don't watch my rants and lifestyle, shame on you. But I'll show you here. What's going on here, okay? So there's a few on. Here we go. This is the one I was reading with you guys. So basically it's this ski mountain. It's a mountain. It's got restaurants. It's beautiful. It's a couple of 100 acres. And Chinese investors are going to buy buying the whole mountain up. Buying up the whole mountain. And it comes with 1,200 acres, private terrain, including 212 acres of skiable terrain, 26 runs. Total of 14 runs also have the lighted infrastructure to operate during the nighttime hours, 4 ski lifts, and 2 tow rope services, skiers, and snowboarders. So it's really sad that Canada is not happening. Canada's I don't even know how this is even allowed to take place, but it's happening. So someone's asking if I have an update from Toronto. It's coming up, bud. It's coming up. So let's go back to here. 1 in 10. Okay, someone just sending me an update. Average price now as of July 13, mid-month. The GTA is 755 large, 755,000. Down 18% from April peak. Thanks, Jake. Jake is also coming in sometimes, giving me yeah. And somebody, maybe the NDP and Green will slow down the housing. We don't know. That's on the back burner right now. I'm not sure what's happening with that. So here it goes. 1 in $10 made in Canadian real estate goes to foreign companies. So I think they go to shell companies, or numbered companies. Canadian real estate companies are making a smaller share of real estate pie. The 2015 numbers were finally released that under Corporations Return Act, showing the breakdown of foreign-controlled interest in Canadian economy. These numbers show increasing control by foreign companies in the categories of real estate, rental, and leasing. Wow. Operating revenues at foreign firms were over $14 billion. Operating revenues for foreign real estate-related industries hit an all-time high for foreign and Canadian firms. Foreign firms saw $14.21 billion of revenue in 2015, and 34% increase from the year prior. U.S. companies took the lion's share of foreign revenue, capturing $11.5 billion of those dollars. To contrast, Canadian composites took $86.7 billion in revenue. This means Canadians are making the smallest cut of the real estate revenue pie. So this is it. So you see what's happening here. It's China is making the biggest piece of the pie in Canada. I'd like to see a Canadian do that in China. I don't think they would allow him. That's the thing. That's just the truth behind it, you know. This means Canadians are making the smallest cut of the real estate revenue pie, and they have made in the last 14 years. Foreign companies captured 4.1% of the total revenue. Canadians firms captured 85.6% of revenue. The last time it was slow was in 2001 when Canadian firms only captured 82.4% of total revenue. Foreign firms are gaining major ground. Holy smokes. Holy smokes. Holy, look at this. Right there. So this is numbers from 2015, people. So watch out. Watch out. So $1 in $10 of your Canadian dollars in Canadian real estate is going to a foreign company. And that's billions, if not trillions of dollars. Sorry, guys, I got to wet my beak there. Thanks for joining us. Trends in the housing market, 20th of July, 2017. Where you're watching this and retransmitting this. Very happy for people listening to this, or radio listeners too. Foreign buyers going to open. So this is Toronto. So let's hit Toronto. Jake Carter, I'm here in Toronto. Fewer buyers going to open houses as Toronto housing market cools, agent says. Agents also report fewer bidding wars, lower offers, and more conditions being added to purchase agreement. Two GTA real estate agents say fewer people are attending open houses, and in light of the new housing measures, roll a page. Two GTA real estate agents say they are seeing fewer potential buyers attend open houses in the area as the local real estate market cools in the wake of Ontario government's new housing measures. Danielle Boyle, I'm thinking what's happening is it's cooling off, but I think the investors are holding back and waiting to see where the dominoes fall before reinvesting. That could be one. That could just be one. That's what somebody was talking about the other day, and they mentioned that. Yeah, maybe, but very unlikely. I don't think so. I think it's going to get worse before it gets better. Danielle Boyer, real estate agent of Bosley Real Estate, told CBC Radio's Metro Morning on Tuesday that the number of people going to open houses has dropped sharply since the measures were introduced in April. She said that the evidence is anecdotal, but the numbers at her recent open houses are roughly half that of the same time last year. Last year, for example, a very beautiful picture-perfect house in Toronto would have between 30 and 40 people to an open house, but a similar house on the market this year would likely draw only 20 people. So here's what Jay Carter was commenting here in the comment section. Average Canadian house worth $504,000 in June, down 10% since April. It's a buyer's market, and potential buyers are being cautious. Guys, super cautious, please. Just don't jump in the water without testing the currents, or without testing the just whatever. She said, so buyers are being cautious, she said, but it does depend on the house. I would say it's more of a balanced market. If any house is very desirable, it will get competing bids. But I would say buyers are being more careful and more judicious about their home purchases, she explained, and they don't swing for the moon anywhere with the bids. So anymore with the bids. So not swinging to the moon anymore. Yep, so that's what's happening. This is what they say for fall. Fall expected to pick up. Pick up what? When we had that correction in April, due to the non-resident speculation tax, it's been a big change. Basically, this second consecutive month of extreme volume weakness. It's largely attributed to a dramatic shift in the buyer's psychology caused by a perceivable future impact of the Ontario government Fair Housing Plan. So, Yeah, so Tyson Fritz is joining us too, and he's commenting. It's a banker's market. That's very true. And then, so people are commenting here. A lot of people commenting. Luki01 is saying Chinese government are trying to stop massive floods of money leaving China, but the new rules aren't working. Okay. So if the rules aren't working, someone leave me a link to that. But apparently it is working from what some people have said, that a lot less money is leaving the country. Sorry about that, people. I'm yawning. It's so early in the show. I shouldn't be yawning at this time. But yeah, this is it, guys. This is what's happening. And markets are cooling. Not a lot of people showing up. You know who else is experiencing this? London, New Zealand. No one's showing up anymore to these auctions. And it's kind of hit and miss right now. People are on the fence. People are kind of taking back, watching the dominoes where they're going to fall, or where the cards fall, or whatever you want to call it. And kind of, you know, maybe looking at other avenues of other places to invest. Well, what am I kidding? Everyone's invested in housing. Everyone. Stock markets are less and less people investing in the markets now because everyone's been moving towards housing. And the markets are even taking a hit on less speculation and less investing because of the housing market. How much? I don't know. Toronto now officially a buyer's market amid the nationwide home sales slump, CREA reports. Guys, don't buy into these articles. Please. Take your time. If you haven't bought a house in 5-6 years and you're waiting to buy in the market, you're dying to buy in the market, don't jump in. Just, if you waited 5-6 years to buy a house and you rented all these years, hey, maybe take another 5-6 months, rent for a bit. Take a look at what the whole scenario is. You know what I'm saying? Because a lot of people don't have millions of dollars to throw around, and if you're not in that position, then I strongly recommend to ease up on the brakes. Buying out of the market looks like being bought out of the market looks like it's going to be a thing of the past in Toronto from what the things look like right now. Monthly home sales declined for the third time straight since March, led by slower activity in Toronto and Southern Ontario. The Canadian Real Estate Association says that the home sales in June posted their largest monthly drop since 2010, with the Greater Toronto market leading the decline. It was a third consecutive monthly decline since March, with sales for June down 6.7%. Compared with May, on a national basis, the association said 70% of the local markets registered month-over-month declines. It added sales dropped 11.4% compared with June of 2016. Wow. Here it goes. Look at that 2008 dip. Woof! Then the other crash here in 2010. So this is the crash in home sales. Look at this. And it looks like it's gonna start. Yeah, this thing's not resuscitating. It looks like it's gonna flatline right here at the end of the graph. The biggest drop by far occurred in Greater Toronto area. Sales existing homes fell 15% in Toronto. The second straight double-digit decline, with resale activity now down by a whopping 42% from its March peak. TD economist Diane wrote in a brief note to clients. So Mia's commenting here saying, my guess is after September, October, we'll see whether things will pick up or continue downhill, especially since the interest rates go up 2.5% again in October, November. So everyone's looking forward to that next rate hike. And they're going to keep doing it. Just raise the rates. You know why? Because Trump is president. But you're in Canada, Mike. What does Trump have to do? Trump is president. Raise the rates. Blame Donald Trump for everything. And that's a good way to put it. You know what I'm saying? And Jake Carter's commenting in from Ontario saying, if Toronto's correction is just a blip and will rebound higher than before is yet to be seen. But I don't recall Vancouver falling nearly this hard last year. Vancouver fell a bit, cooled off, went down. Then it kind of retracted just a bit and then cooled off and plateaued right now to where it is today. But everyone jumped on the smaller units and the condos and townhomes. Like I said before, condos, townhomes, jumped on everything, jumping, eating it up. And the first article I read, or the second article I read, if you haven't seen it, please go back and see it, where a house or the condo went up $130,000 in 1 month across the board on a 6 or 7% gain in 1 month in West Vancouver. Okay, someone from Michigan's commenting, put Trump into the blame. Blame him for not being a globalist, where I disagree with other conspiracy theorists saying that he himself is corrupted by part of it. He travels to Nashville and acts like a redneck. Haha. Anyways, so yeah, so I mean, just blame Trump. Who cares? Something happens in Ethiopia and somebody gets hurt, it's Donald Trump's fault. It's Donald Trump's fault. So this is what's happening. Sales slump, housings are going down, people aren't showing up to auctions anymore. We got to head out to London, folks. And London is in a stagnant, unmovable state right now. Not one of London's 20,000 empty homes was seized by town halls last year despite the housing crisis. So in London, they were passing laws for empty homes and seizing homes and giving them to families and blah, 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 and the whole 9 yards, right? So London is in a lot of hot water right now. And this trend is in Europe. It's in Toronto. So let's continue here. Official figures show that the number of properties taken back into use in 2016 was the lowest for more than a decade. Kensington and Chelsea, scene of the Grenfell Tower fire, which left more than 160 families homeless, had the highest number of empty dwellings at 1,399 of London's borough. Yet it made one application to bring an empty property back into use in 2006. Really? The year empty dwelling management orders EDMOs were introduced. Overall, 208 applicants were made across the UK, of which 137 were granted. The number of applications countrywide peaked 41 in 2012, has fallen the average less than 20 a year since then. Across England, only 9 seizures applications for long-term vacant homes were made last year, although the government data shows that there were more than 200,000 long-term vacant properties. So that's not good. A lot of people homeless, and there's a lot of vacant properties. Now, let's get to the icing on the cake. House prices continue to stall with fears a fresh slowdown in London could be underway. So London's been experiencing for the last 3-4 months-ish, since that whole Brexit stuff that's going on and discussions, and it's looking like London's is in, again, boiling water. Not hot water, boiling water. Look at that. Everything's for sale. House price growth continued to stall according to the official figures, with monthly rate nudging only 0.5%. The annual rate of growth in May was 4.7%, down 5.3% of the year. April bringing an average UK house price £221,000. Analysts at the PC have forecasted it will slow to 3.7% in 2017, while Capital Economics has said it could reach 2% by the end of the year. The slumping growth rate comes amid a general slowdown of activity in the housing market last week. The Royal Institution of Chartered Surveyors found the number of properties for sale per branch is at the record low, with the levels of new buyers agreed to sales is depressed, particularly in London. This suggests that the fresh slowdown could be underway in the capital, in quotations, said Hanson Liu of Capital Economics. So look how stagnant this growth is. So this is it. London looks like So I'm looking at this. It's a long article, and let's move up. So I want to do a plug here from my man Claude Sinclair. Claude Sinclair is a really good. He does what I do, but he talks about Jamaica, but it's really interesting what's happening with Jamaica, and he's really scared of how Jamaica is basically being bought out by foreign investors, and they're buying up the businesses in Jamaica. And he's saying that a majority of the businesses in Jamaica now are foreign owned by foreign investors. I really recommend that you see Claude Sinclair's video on this, because I was actually blown away. He personally sent me this link to watch, and this is phenomenal. I don't know why and how, but it's happening in countries you could never imagine would happen in with this. You know what I'm saying? This could be pretty big. Somebody's commenting here. Hold on. Canada is overdue for a recession. And then what type of losses do people suffer before later comes? The RE is holding us up. For the middle class people, life is already a recession. I don't understand your question. Interest rates must be increased and should have been long ago. When our economy slows down, in a couple of years, there'll be a drop in rates, a couple of points. Well, what's happened is, like, the thing is, interest rates they have to go back up. They need to, how do you say it? Stimulate the economy. They got to raise rates. There's no way to go. I mean, if there was another way to go, I mean, they would probably have thrown that at the wall, see if it sticks. But there's nothing right now that could stimulate the economy. Oil's selling below the cost of production in Canada. We're not producing and selling anymore. We're not fabricating as much as we used to anymore. Wages are low. So instead of creating jobs and then taxing people on their labor, which is illegal, but they're still, the CPP, all that stuff, and taxing you on your labor, instead of creating the jobs and then the government making a revenue on your labor, they're not doing that anymore. So when jobs don't get created, people don't get taxed. And when people don't get taxed, people spend less. And when people spend less, you need to bring in foreigners to bring in and fill the void. And bring in lots of money. And that's what's happening, you know what I'm saying? And so anyways, this is my guy called Claude Sinclair, and he was talking about how Jamaica is going to become the first Chinese colony in the Caribbean. Weigh in on that in your comments. Let me know what's going on with that. Let's move on. All right, let's go to Auckland, New Zealand. This is a good one, people. Have a seat, relax to hear this one. Auckland's affordable housing price cap up to $650,000. So if you want to buy an affordable house in Auckland, New Zealand, an affordable starts at $650,000. The price cap for affordable homes built under Auckland Council Housing Accord is set to rise. More than 200 homes are being built in Hobsville Point's 7.7 HA Sutherland Precinct amid the tackling Auckland's housing shortage and fast-tracking construction of affordable housing. A fully owned subsidiary housing in New Zealand with its spring heading the project announced today that the price cap for its Access Series homes will rise to $650,000 from $550,000. Yay! What else isn't going up? Everything's going up, but people's wages. Let's go to Domain Housing Report. So Sydney's in trouble. Sydney house prices jump again. Sydney is out of... and a lot of people ask me, okay, Mike, prices can't keep going up. Yep. Okay, I'll tell you how prices keep going up and how they maintain it. They kick out all the locals, bring in more money, and it becomes a playground for the rich. Plain and simple. That's it. Really dehydrated, folks. Playground for the rich. I really feel, this is from July 20th, by the way, so I'm reading this from the future. I really feel for the people down under. Sydney houses prices jump again, but days of double-digit growth are over. Sydney's property market has soared to new heights, with the new median house price now $1.18 million. Data released on Thursday shows. But surprisingly, unit prices grew at twice the pace over June quarter, suggesting supply is still yet to catch up with the demand. So remember what I've been saying from friggin' the last year and a half? Is the smaller, inexpensive units are being gobbled up and resold and gobbled up. Sydney apartment prices jumped 3.2% over the past 3 months. See what happened in West Vancouver. See what's happening. It's the smaller units that are being devoured. 757, 991,000, while houses grew a modest 1.6% to 1.1. The latest domain state of the market report shows. The strong apartment market growth came as a shock with AMP Capital chief economist Shane Oliver, who had anticipated a sharp slowdown on the back of record building boom. We've got units popping up like mushrooms. I don't even play Super Mario Brothers. When mushrooms pop up, well, that's what he means, okay? I expected this would be more of a dampener on prices. It's likely some points in time prices will ease for units, Dr. Oliver said. We've got units popping up. I already said this. I'm not going to repeat this. Despite the strength of growth, he said, it was clear slowing on the back of the rate hikes targeted by investors by the banking regulator APRA. It will slow further because we have yet to see a full impact of rate hikes, which continued on through the quarter, he said. Compass Economics chief economist Hans Kunin said it's likely homebuyers were opting for apartments instead of houses due to an affordability barrier. It's not, I don't think it's an affordability barrier, people. I think they're wrong on that, and I'll tell you why. It's easier and more manageable to flip condos because especially if you're leaving it vacant, you don't have grass to cut, you don't have all this Mickey Mouse that you got to take care of. Then with the condo, you got a concierge downstairs watching people coming in. Your place being broken into is very unlikely. So that's what so condos are really good if you want to flip fast things and, but that's that. And I really feel for so despite the slowing, it is now $130,000 more expensive to buy a house than a year ago. With prices up 12.7% in the past 12 months, units have jumped 10.5% over the same period. I really feel for the people in Australia. Especially people that are born and raised, and I'm talking about the Sydney proper. People, the Sydney proper. People in Sydney that are born and raised, educated, went there and bought into the whole student loan crap, got their education, and then now are just working to just pay the man. You know what I'm saying? Yep. Everyone's feeling bad for those in Australia. Mortgage demand suggests Australian housing market is cooling. So here's another tug-of-war article, basically contradicting what the other article said. Mortgage applications were down almost 1% in June quarter. Another sign that the housing market is beginning to cool. 1% on applications? What if the person can't read and write? I mean, do you count them into it or something? Yeah, so Dylan Lopez is saying Vancouver did the same price dip last summer. Yep, I mentioned that. Anyone think Toronto's going to do the same? I'm going to tell you straight up, I don't think so. And because Vancouver is Vancouver and Toronto's Toronto. It's a different... It's just a whole different ball of wax. I see Toronto's condo market going up and the smaller units and townhomes going up, the cheaper units going up. I don't see the detached market rebounding. I just can't see it. I don't feel it. And if it does, Obviously, I'm wrong, but it's going to make it harder for the next Canadian generation. The next generation, my next generation, the next Canadian generation is going to suffer to a point where the futures have been sold out. So the millennials right now the millennials today have been sold out to the highest bidder. And that's what's happened. Now, if the millennials get bought out, their kids will be bought out for sure. Because people will start being born into debt. They're already born behind. So they're going to be already behind by the time they finish high school. It's just going to be an economic war. I see it like a huge economic war where the economy is going to be so heavily dependent on housing, more than it is today. And the poor are going to get so much poorer. And the rich is going to get so much richer. There's going to be a huge gap between the two societies. There's no middle class. It's going to be called working poor. And like I said, they're going to have to move locals out of certain cities, or locals like myself left a major city and basically move to a smaller town, and those major cities become a playground for the rich and famous. And that's just what is going to eventually happen if there's no crash. I can't see any software companies and hardware companies and huge corporations operating out of these major cities anymore because of the brain drain. They can't hire anybody to work there. So they're going to have to move their outfits out in the country and, and take it from there, But I just wanted to put that out there, A lot of people are hoping that there is a crash for correction, and there needs to be some sort of correction. And this whole Ponzi scheme and of propping up the markets, So Dylan Lopez is commenting again and saying, they say the first home buyer plan drove up condos in Vancouver. That's only BC program though, right? Yes, it is. That was brought in by Christy Clark, the former premier of British Columbia. Interest rates creeping up might push affordability where condos is all people could afford. That's what happened. That's what they were saying in the last article I was reading about how people are going to cheaper, more affordable properties. But people, if you're bought out of the market and you want a house and you have 5 kids or 4 or 3 kids, don't settle for a condo and the strata fees and all that. If you want a house, just keep your dreams alive. Don't buy into something. If it loses value and you're underwater, then you're hooped. And then now with these mortgage rates going up, and if you're in a variable rate mortgage, you're hooped. A lot of this junk, I call them junk loans, junk mortgages being put on the books. These underwriters approving these deals that should be illegal. I don't even know how some of these deals get approved. And fudging income numbers so people could fit. Oh, I'm helping the client get a house. He really needs a house. So I'm going to adjust his TDS, adjust his income. I'm going to remove this credit card from his creditors list to make the TDS fit. That's illegal. And you're not helping the customer because you're going to see more forfeitures than you ever did in history when you do that. But let's continue here. So mortgage applications are down. I don't think that's enough to say that. I don't think that's enough to give an analysis. You know what I'm saying? So let's go here. Yeah, I read this already. 25 years ago was normal to own a house outright. Now it's going up. Owned with a mortgage. Look at that. It's gone up, shot it up. Renters went up in 91. Look at 2016. Renting is going up more. No one could afford to buy. especially in Sydney and Melbourne. Let's continue. Housing stocks may not be on terra firma. This is from Routers. Let's continue. Routers. Investors may have overbuilt the U.S. housing stocks as data has yet to match up with the home builder sector biggest rally in 5 years. The S&P 1500 Home Building Index .SPC home of home builder companies has surged 30%. So I am currently I was currently offline. Sorry guys, it's been resumed. Sorry about that. I don't know why, but I temporarily went offline, but everything's back on again. Sorry. So some investors will see opportunities, but others warn stocks may have run too far. This is timing the market, people. They're timing the market here. And this is not a good time to invest in these stocks. Double-digit growth. The ship has sailed. So I brought this article on board today. It's a long one too. I brought this on so people that are looking to invest into housing stocks, be extremely careful because the ship has sailed, and buying high right now is a mistake. Somebody asked me that in a question on one of the comments in one of my YouTube videos. Now, remember the whole west coast of America struggling with this whole housing fiasco? Well, Seattle and Tacoma metros both among the most competitive housing market in the U.S. So, Dylan, you're watching this, right? After that last fall or spring or whatever, when they implemented that foreign housing tax in Vancouver, and you know where everyone went? Seattle, south of the border. And if you look at my past videos, you guys will see how I've been talking about this for the last 6 months, how Seattle real estate agents and Vancouver real estate agents are teaming up with Seattle real estate agents, making, what do you call those, when you buy like flyers, making flyers and brochures in Chinese, going to China and flying in customers to buy up in Seattle. So after that was laid out in Vancouver, that tax, the real estate guys and real estate agents in Vancouver got smart, went down to Seattle, met up with a couple of brokers down there, met up with a couple of agents down there, set things up, and then just started bringing in people. You know what I'm saying? So apparently my streaming is getting weak here. I'm not sure if people are watching this and flagging it, but Seattle and Tacoma metros, both among the most competitive housing markets in the United States of America. There's a lot to be said about Seattle's high-cost, high-competition housing market, but as it turns out, Tacoma's right up there with us, according to a new report by real estate group Redfin. Their market report for June shows that Seattle Metro, which includes Everett and Bellevue, shows no signs of slowing down, but neither does the Tacoma area. So a lot of these people don't want to... A lot of the people in power right now, the governor and the mayors and all that, they're liking this because things are going up, things are booming, but the Seattle proper or the Washington proper now is in a bind. Rents are going up, everything's going up. They're in this massive bind in Seattle. You guys have no idea how I spoke to a couple of people on the ground there in Seattle, some boots on the ground, and they've been sending me messages and sending me things that houses can't stay on the market, multiple bids. And Tyson Fritz is saying, isn't Tacoma... Tacoma's like almost like a Buffalo. If you've been to Buffalo, New York. But anyways, Seattle has the third highest price growth in the country. Redfin's report 13.5%. But Tacoma's right there in fourth place with 12.2%. So how did this happen all of a sudden in the last 8 months? It's when Vancouver put that tax on. A bunch of real estate agents in Vancouver made their way to Seattle, teamed up, and just took care of that. And then now look what's happening. Making brochures in foreign languages, getting people to come down. And like I'm not kidding. I'm talking about they're flying them in on private jets to come in, catering them meals and everything, showing them properties on the market, going with them to, what do you call it, auctions, when they auction off the house. They're auctioning houses. They're going 10, 20, 30% over asking in the Seattle Tacoma market. So Vancouver was left behind. So how that translated in home prices, the Tacoma's area medium house price has jumped $320,000 according to Redfin. It jumped 320,000 people. That's still a good 200,000 more than Seattle area medium of 525, but it's climbing. Competition is driving both up Seattle and Tacoma areas. Home prices similar rate too. The majority of homes are selling above asking in both areas to a tune of 52.6% in Tacoma and 62.3% in Seattle. Yeah. Things are getting super rough for buyers there. In June, reports that Seattle was tied for the fastest market with seven median days on the market per listing, 1 day faster than this time last year. Tacoma and the homes are lasting just over a week with 9 median days on the market, 2 days faster than the previous year. So the whole West Coast is plagued with this rising house prices. Portland, 2.5 hour drive south. Cranes crowd Portland skyline as building boom continues. Portland, Oregon. John Killen pressed the panic button in February amid the multi-billion-dollar tsunami of real estate development. The building frenzy lit up the Portland area economy and changed the city irrecoverably. Has deleted the pool of skilled construction workers. In a letter, fellow contractors, Killen warned of the new normal, a chronic labor shortages. There are probably 10,000 job openings there, said Kilman, executive director and the Associated Well and Ceiling Contractors. Oregon and Southeast Washington, we need 800 carpenters. We need about the same number of electricians, and there are 20 more trades. Nearly a decade after the Great Recession, the long, frustratingly slow recovery has morphed into a barrage of development that some measures surpassed the mid-2000s housing bubble. The city issued nearly 12,000 building permits throughout the first 10 months of the current fiscal year. When Vancouver applied the foreign tax. That's when it kicked off. $2.5 billion in projects, easily eclipsing the previous high $1.9 billion set a year before. Let me see here. There's another part. There's a long article. Multifamily is falling slowly. The housing sector has garnered the most headlines in Portland due to skyrocketing prices for renters and buyers. The rock bottom vacancy rates and apartment seekers, but the growth is showing signs of slowing, especially at the high end. More Portland apartments are building, offering incentives to fill up expensive units. So Portland is also 2.5 hours drive south of Seattle. Portland, Oregon is seeing this so like I said, just like Mike said, because they need people so bad in trades, etc., so they get anyone with a pulse who can swing a hammer. That's very true. It's the brain drain, the skilled trade. It's not that there's no carpenters. There's obviously a lot more carpenters that did live in that area when it was affordable. But then when you have to drive an hour into work, 2 hours into work, 40 minutes, even a stupid train ride into work, it's not even worth it anymore when you're building a future for somebody else. You know what I'm saying? Let's leave Portland and drive 6 hours south to the Bay Area. Bay Area real estate region has the toughest housing supply in the state and highest prices. So you see this whole West Coast? The whole from Vancouver all the way down to San Diego. Bay Area single-family home prices rose 7.9% in June from a year earlier, outpacing the 7% statewide price increase. The Bay Area home prices remain far more expensive than statewide home prices, according to New California Association Realtors report. Closing in on $1 million, the Bay Area's medium price 908 large for a single-family homes was much higher at statewide. The medium sale price was $555,000. A look at some of the numbers from specific counties. The median price rose 12.6% year over year. 1.1 million Santa Clara County, 12.1% in Alameda County. It jumped 9.8% to 1.4% in San Mateo, 8.8% to a 1.4% in San Francisco, 5.6% to 660,000 in Contra Costa County. All of this is driven by a combination of low housing supply and job growth, worried by that they won't otherwise seal the deal. Buyers are pushing sales prices higher and higher. So there's a lot of, so this goes into right here. Sales prices and percentages year to date and everything. And month to month. There's a very detailed graph, but a lot of empty homes. You see, I like, okay, they make these articles. Okay, yeah, this is nice to read and this, fine. Mention the empty homes, the 200,000 or 300,000 empty homes in California. Or 400, so it's a ridiculous number. So many empty homes. The U.S. has like 36 million empty homes owned by investors. You know, nobody ever talks about, you know, the empty homes. They keep saying, let's build, let's build, let's build. What's the point of building when half or 3/4 of that crap is going to remain empty anyway? What good is it going to do? And another plug here. This is for my guy, Mario DeCettis. This guy's good. This guy has Sears pension, help the retirees, big crisis. So he's doing a really good job with this channel. He's getting into the nitty-gritty, talking about what's happening with pensioners, what's happening with the housing crisis, with the housing market. I really, 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 really strongly recommend to see his channel, what he's got going on, because he's on the ball. He's uploading pretty much every day or every other day discussing this problem. And this story. Will China's tightened capital controls pop the housing bubble? China imposes further restrictions to control capital flowing out of the country. There's someone popping a bubble there. Will the latest round of rule tightening of capital flying out of China hurt the Vancouver housing boom? Experts doubt that the housing prices surged to record levels in June. For years, headlines have been screaming and warning that Canada's housing bubble risks bursting, drying up foreign investment, fueling the market frenzy. This month, the limit on foreign currency transactions in China was lowered to $9,000 to increase security on investment money flowing out of the country. So currency transaction out of China is $9,000. So somebody commenting here from Michigan. I think the most optimistic people about real estate and the economy are too busy working to learn to speak English to understand the Fed and or our political mess. So it's true. Look at this. So they got to, so China caps capital, but what if buyers from China stop investing? China has been cracking down on capital outflow for years. In January, new rules were created to curb the exodus of money overseas that's threatening Chinese economic stability. Only $65,000 per person is allowed in a foreign transaction a year. And there are strict limits on buying investment or real estate. On the 1st of July, regulators dramatically lowered transactions to limits of $9,000 before they must report to banking regulators. Market watchers are divided on the impact of restrictions that could have on Vancouver's overheated housing market, which saw condo and detached home prices surge to record levels in June despite the restrictions and Vancouver's controversial new foreign buyers tax. Even the Royal Bank of Canada senior economist Rob Hugh, who warns that the rising interest rates and high prices will contain pace of price in 2018, acknowledges that the BC's real estate market rebounded faster than expected. So, what do you guys think of this? I'd like to know. They could only take out $9,000. I mean, that's not a lot of money. And, 10 years ago, that could put you down payment on a condo, but now that doesn't even get you a down payment on a closet. She says in a country of 1.3 billion people, rules are never hard and fast, and regulations are apt to be overwhelmed. By September, she says, China will tighten monetary controls even further, requiring every 1,000 renminbi or $191 transaction into foreign currency to be reported daily. So basically what they're saying is they're just trying to get this fixed because too much money is leaving China, and a lot of people are like, well, you know what, it's people wanting to invest, but the problem is China's going bankrupt with its wealth, with a huge percentage of its wealth leaving the country. It's going to cripple. They're basically biting the hand that feeds, or you know what I mean, right? They have underground ways of taking it out, and multiple people sending money out will have money out the same way. So, this is in the news the other day, actually, that the United States is thinking of removing the 50 and the $100 bill. And this will stop a lot of money trafficking, because then you're going to have to start trafficking 5s and 10s and 20s. And that would be really hard. $1 million would be like 10 suitcases of money. And I see that the United States removing the $50 and $100 bill, when everything's electronic now, where you could buy something electronically. You don't need a $100 bill to buy something, or walk around with $700, $800 in your pocket. You know what I'm saying? So I'm going to leave this with you guys, and let me know what you guys think of this whole, in the comments below. Let me know what you guys think of this whole Chinese tightening the restrictions on money going out. If I was the Chinese government, I would do the same, because the country would end up just going. There would be a runoff in the money markets, and money would just leave the country like a leaky fountain, or a leaking gas tank, or a leaky God knows what, a waterfall. And the last thing the Chinese government wants to do is go into a massive recession, because its wealth is leaving its own shores, right? So let me know what you guys think on that. Do you think these measures will hold up? Or do you agree with what some of the comments are saying here in the comment section about how it's basically ways of transporting money? But then if they cut the $50 and the $100 bill out, it's going to be a lot harder to transport money. And they have dogs that sniff money too. They have dogs in the airports that sniff for huge amounts of cash. Believe it or not. Anyways, guys, thanks for watching. I really, really appreciate. Get this out there. And if you're listening to this on a radio stream somewhere, I really appreciate you taking the time to listen to this transmission. And your comments are much, much, much. I'm thankful for the comments. And don't forget to hit the subscribe button. And I'm going to go to sleep, people. I'm tired. Good night.